Hi, I'm Karina Mendoza from the University of Wisconsin-Madison Division of Extension with today's UW Mindful Money Moment. Today I'll be talking about everybody's favorite two topics, which are student loans and taxes. Woohoo! We know how to party. More specifically, I will be talking about three major tax advantages of paying for college that you or anyone who may be claiming you as a dependent should be aware of when you are filing your federal income tax. And as gracefully as possible, I am going to go ahead and share my screen to make the information a little bit easier to process. So let's see. There we go. So the three major educational tax credits are the American Opportunity Tax Credit, the Lifetime Learning Tax Credit, and then, of course, the Student Loan Interest Tax Deduction. These educational tax credits and deductions help lower the cost of higher education by reducing the amount of taxes owed. And in some cases, if the tax credit reduces the tax liability to less than zero, you may be able to get a refund. And that puts money back into your pocket. And that's exactly what we want to do. So for the major tax credit for any student attending an accredited post-secondary institution is the American Opportunity Tax Credit. This credit allows you to claim up to $2,500 per student per year for the first 4 years of school at an accredited educational institution. With this refundable tax credit, the taxpayers with the high education costs may be able to get up to $1,000 back. The tax credit takes into account the qualified tuition payments, the required enrollment fees, and the cost of purchasing school books and supplies. This tax credit is created specifically for students who have not finished the first 4 years of higher education at the beginning of the tax year, have not claimed the American Opportunity Tax Credit, or what we used to call the former HOPE credit, for more than 4 tax years, for students who meet the income guidelines, and most important, also equally important, for students who do not have a felony drug conviction at the end of the tax year. To claim the American Opportunity Tax Credit, the taxpayer or the student must provide the school's employer identification number called EIN, and this information can be found on Form 1098T, which is the tuition statement that most schools are required to provide. Generally, students receive the 1098T via email or mail or individual online student accounts. This is why it's imperative that all your school-related accounts have your most updated mailing address and contact information. And this, of course, includes your student loan lender company. The Form 1098T and other tax-related financial forms are crucial when claiming the American Opportunity Tax Credit. Therefore, if you do not receive this form, or if you receive the form and any of the information is incorrect, please contact your school as soon as possible before April 15 for it to be corrected. For students who have already finished their first 4 years of post-secondary education, or for those who take the occasional course to improve work skills, you can qualify for a different tax credit called the Lifetime Learning Credit. The Lifetime Learning Credit is for qualified tuition and related expenses paid for or by the student. This credit can help pay for undergraduate, graduate, and professional degree courses, including courses to require or improve job skills. Unlike the American Opportunity Tax Credit, there are no limit to the number of years that you can claim the lifetime learning credit. It is a non-refundable tax credit, that which means that that it could reduce your tax liability to zero, but you will not receive the credit as a refund. Nonetheless, a zero tax liability is always better than having to pay in. So take advantage of it if you qualify. Most educational institutions will provide you with the Form 1098-T. Otherwise, you would need another way to document the school-related expenses to claim the lifetime learning credit when you're filing your taxes. Please note, though, that you can only choose between the lifetime learning credit or the American Opportunity Tax Credit. You cannot claim both credits in the same year. If you have the choice and if you qualify, the American Opportunity Tax Credit is always greater than the lifetime learning credit. Finally, and thank you for staying with me, we have the student loan interest tax deduction. The special deduction is available for the interest payment that you pay when you're making your student loans payment. The amount you can deduct is limited each year, and you can only deduct the interest on the student loans used to pay for qualified undergraduate and graduate educational expenses, including room and board. The beauty of this deduction is that both undergraduates and graduate students can claim it, and it does not matter if the student making the loan payment is still in school or if they're out of school. If you're making student loan payments, you may be able to take this deduction for that year. So please take advantage of that. To learn more about these tax credits and deductions, or to determine your eligibility for them, you can always visit the irs.gov, or you could ask or talk to your tax preparer. This was simply a very short introduction to the tax credit that you may be eligible for and should be aware of, and be prepared to ask. Feel free to rewind or review this video as many times as you need to. You could also contact your UW Extension educator. Thank you for your time, and please reach out to your local UW Madison Extension financial educator for assistance in strengthening your financial well-being, and just know that we are here to support you. Thank you so much, and take care.